You ever look at a crypto chart and just see a total mess? Just a bunch of chaotic lines going everywhere? Yeah, that's a pretty common feeling. But for the pros, it's a completely different story. They're seeing patterns, they're seeing signals, opportunities that most of us just don't. So let's pull back the curtain on this whole thing and really see how they do it.
And I mean, it's easy to see why, right? Prices are swinging like crazy from one day to the next. It just feels random, pure noise. But what if I told you it's not? That there's actually a method to the madness? The real question is, what are the pros seeing that we are missing? How do they cut through all that chaos to make calm, smart decisions?
Well, the key is to think of the market like an onion. Seriously. You start with that outer, most visible layer, and then you just keep peeling your way in. And with each layer, you uncover deeper, more powerful information. So for this explainer, that's exactly what we're going to do. We're going to peel back 4 layers to get right to the very core.
All right, so this first layer, this is where pretty much everyone's crypto journey begins. It's the stuff that's super easy to find, you know? It's the public face of the market, giving you that quick snapshot of what's going on.
So most of us, we start with sites like CoinMarketCap or CoinGecko. You've probably used them. They're basically the scoreboards, right? They give you the what, the price, the volume, the market cap. CoinMarketCap is the old school veteran, super easy to use. CoinGecko, on the other hand, digs just a little bit deeper. They'll track things like developer activity, giving you a fuller picture. And there you have it. That's the first layer of our onion.
Okay, but here's the thing. That's just the surface. The price is just a number. To really get what's going on, you've got to move beyond that and see what investors are actually doing with their money. And to do that, we have to go straight to the source, the blockchain itself.
And this is where it gets really, really interesting. It's called on-chain analysis, and it's basically like being a digital detective. See, because most blockchains are public, you can literally follow the money. You can see the transaction data yourself. You can spot when the big players, the whales, are moving huge sums to an exchange, which might mean they're about to sell. Or you can see when they're quietly buying up more. This is the kind of stuff a simple price chart will never, ever tell you.
And check out the toolkit the pros use for this. It's pretty amazing how specialized these platforms are. You've got Glassnode, which is an absolute beast for analyzing Bitcoin and Ethereum, especially for tracking those whales. Then there's Nansen, which is famous for labeling wallets so you can literally follow what the smart money is buying right now. And you even have tools like Token Terminal, which treat crypto protocols like actual businesses with revenue and everything. Each one gives you a totally different angle to understand the why behind the price.
But, okay, numbers and transaction data, that's only half the story, right? The crypto market, maybe more than any other, is just driven by raw human emotion. We're talking fear, greed, hype. These things can move prices just as much as anything else.
And this classic quote just nails it. The market is basically a pendulum swinging between crazy optimism and total pessimism. And in crypto, that swing is amplified like 1,000 times. When everyone's getting euphoric, that's often when things are the most dangerous. And when there's blood in the streets, as they say, well, that's often where the real opportunities are hiding. And the pros, they don't guess about this stuff. They actually measure it.
So how do they measure it? Well, they use tools like the famous Fear and Greed Index. It takes a ton of data and boils it down to one simple number. When that number says extreme fear, it can mean everyone's freaking out, and it might just be a great time to buy. You've got LunaCrush, which scours places like Twitter and Reddit to see what people are saying. And then there's more advanced stuff like Glassnode's NUPL metric. It basically figures out if the average investor is sitting on a profit or a loss. If everybody's in huge profit, that's a pretty good sign of greed. If most are losing money, that signals fear. It's like taking the market's temperature. All right, it's time to peel back the final layer. We're getting to the absolute core of the market onion now. This is a world that most of us, we never even see it. It's a place where decisions aren't made in days or hours or even minutes. We're talking milliseconds. Welcome to the wild world of high-frequency trading. And this analogy just explains the insane technological edge that institutions have perfectly. See, a regular person might use a standard API to get data. That's like calling a restaurant every single second to ask, is a table free yet? Is it free now? It's slow and clunky. The pros, they use something called a WebSocket. That's like giving the restaurant your number and saying, call me the instant a table opens up. The data gets pushed to them immediately. And that instant data feed, that's the lifeblood of what we call high-frequency trading, or HFT. It's all done with algorithms, but the name of the game is pure, unadulterated speed. We're talking about supercomputers finding and exploiting tiny little price differences that exist for maybe a fraction of a second. This isn't about long-term investing. It's a game of speed, executing millions of trades at a rate that's it's physically impossible for a human brain to even process.
Now this diagram looks pretty complex, I know, but it shows you the basic idea. You've got market data flooding in, it hits a powerful GPU that makes a decision in a split second, and then an order gets fired right back to the exchange. That whole loop, it happens in a tiny fraction of a second. This is the engine room of the modern market, and it is running at light speed. And the result of a system like that? It's a volume of activity that's almost hard to believe. Just look at this chart from a research paper. On the right, you see the number of trades. We're talking up to 20 million trades in a single day. And on the left, you see the returns. Consistently profitable, even during the chaos of the COVID-19 pandemic.
So, with all this powerful technology, you have to wonder, are there any rules? I mean, a system this complex, this fast, it can't just operate in a vacuum, right? And that brings us to the foundation that holds this whole thing together.
Now this isn't really another layer of the onion. It's more like the ground the onion grows in. I'm talking about regulation. It's the final and, you could argue, the most important piece of this entire puzzle. It's what sets the rules of the game for absolutely everyone, from you and me, all the way up to those high-frequency trading firms. And all over the globe, governments are starting to put clear legal frameworks in place. For instance, Taiwan's Financial Supervisory Commission has laid out guiding principles for what they call VASPs. That's Virtual Asset Service Providers. Basically, it's the exchanges and platforms we all use every day. And this isn't just red tape. Having clear rules like this provides guardrails for the industry, and it's absolutely shaping the future of the market.
So, let's put it all together. When you combine all these layers, you go from just seeing a price to understanding the whole picture. You know what the market is doing from the price trackers, you know why it's doing it from on-chain data, you know how everyone feels from sentiment analysis, you see how the big institutions act with HFT, and you know the rules they all have to play by because of regulation. That is how you build a professional, 360-degree view of the market.
Which, of course, brings us to the big question for the future. As all these amazing tools make the markets more transparent, will they also become more predictable? Or does it just make the game faster and even more complex? Well, one thing's for sure. Having more insight doesn't always guarantee easier profits, but it always leads to a smarter, more informed decision.